In the previous few classes for corporate accounting, we had dealt with mostly some very simple problems, and of course the theoretical aspects also have been covered under our previous few videos. Okay, so we're moving on today to another topic under corporate accounting. Now this topic, forfeiture of shares as well as reissue of forfeited shares, I'm pretty sure you've heard of it. We have already probably in school, when you were in school, you would have solved problems and all regarding this. So I'll just give you a brief run through of the meaning of forfeiture of shares, reissue of forfeited shares, and then we're moving on to problems under these topics. Okay, so talking about forfeiture of shares, the term forfeit, it refers to taking away of property on the breach of a condition. Now, when we're talking about breach of a condition, especially in case of issue of shares, breach of condition is when they fail to pay some amount. Okay, so it is very common, especially in day-to-day business activities, it's very common for one shareholder or for more than one shareholder to fail to pay the call money or even share allotment money when the amounts have been called for. So if they fail to pay these allotment money, or even if they fail to pay allotment and the calls also, or just the calls money, failure to pay will result in the forfeiture of shares. Okay, failure to pay when the money has been called for will result in forfeiture of shares. Forfeiture meaning taking away of the property. So, forfeiture of shares is the action taken by a company to cancel the shares. Meaning, if the shares have been forfeited or if the shares have caused in arrears, then they can be cancelled by the company. And the directors are usually the people or usually the body who are empowered by the articles of association of the company to forfeit those shares by serving proper notice to the defaulting shareholders. They have to firstly, before they just cannot cancel it willy-nilly, right? They cannot just cancel it anytime they want. They have to first send a notice to these shareholders telling them that they'll be cancelling the shares because they haven't paid. So it'll give them a chance first to pay. And if they're still not paying, then they will cancel the shares. So when the shares are forfeited, the title of such shareholder will be removed. When the shares are forfeited, the ownership to those shares, the person, let's say Mr. A was a shareholder of XYZ company. Okay, so the moment they have been forfeited, Mr. A no longer is a shareholder of the company. So the title of the shareholder is extinguished by the amount paid to date. But the amount paid to date is not going to be refunded to him. If he has paid the application money or if he has paid allotment money and failed to pay the calls money, then the amount that was received by the company will not be repaid to your shareholder. And the shareholder also cannot claim for the repayment of the shares. At the same time, in the future, he will not have any claim over the company because he's no longer the shareholder. Now, the power of forfeiture must be exercised strictly, having regard to the rules and regulations provided in the Articles of Association, and all these rules and regulations should be mostly in the interest of the company only. Okay, so it should be in the bona fide interest of the company. Now, there are provisions which are usually based on Regulations 29 to 35 of Table A, which authorize the directors to forfeit the shares for non-payment of calls money. So if you have to check with, or if you want to just have a brief outlook on the different provisions regarding share forfeiture, you can just check Regulations 29 to 35 of Table A. Okay, so that is forfeiture of shares. And then you have reissue of forfeited shares. The shares which are cancelled, when they are going to be reissued, it's termed as reissue of forfeited shares. Now, a forfeited share is merely a share available to the company for sale, and it remains vested in the company for that purpose only. In other words, when we are forfeiting a share, it becomes the property of the company, which is available for sale, and it stays in that company, or it remains in the company only for that purpose, that is, for the purpose of sale. And reissue of shares is not allotment of shares, but only a sale. When you're reissuing forfeited shares, you're not allotting these shares because these shares have already been allotted to a shareholder. Okay, they have already been allotted to a shareholder. However, the shareholder has failed to pay, so these shares have been kept aside for another person to come and take them over. So when they're taking over, it is not reallotment, but only a sale. So when the shares are reissued, return on the forfeited shares need not be filed under Section 75, subsection 1 of the Companies Act of 1956. Further, The share after forfeiture in the hands of the company is subject to an obligation to dispose of it. The moment the company has any shares that have been forfeited, it becomes its duty to sell off this share, to dispose of the share. Because why? Well, in case of remember the different classifications of shares that we had, where we had authorized capital, issued capital, subscribed capital, and so on and so forth. So when we're talking about the issued capital, you've already proposed to issue, let's say, 1,000 shares. But after the issue, you've cancelled some, but the issued shares amount remains the same. So you have to sell it off first, okay, to ensure that you're reaching that same amount of issue of shares as have been proposed in the articles or in the memorandum. Now, in practice, forfeited shares are disposed of by an auction. People have to auction. So you know the meaning of auction, right? Where the highest bidder gets the amount or the highest bidder gets the asset. Okay, so these shares, when we're talking about reissue, they can be reissued at any price. They can be issued at discount, at premium, or at par. Okay, so they can be issued at any price as long as the total amount that is received from the original allottee, the person who has failed to pay, and the second purchaser, the person who receives the shares on the auction process, for those shares, as long as the total amount for those shares is not less than the total amount in arrear on those shares. You can issue it for any price as long as it is more than the amount of arrears, because you have to cover for the loss. Okay, so it should always be more than the arrear price. Okay, so this is on reissue of forfeited shares. So let's look at a small problem. H Limited issued 10,000 equity shares of rupees 100 each, payable as rupees 20 on application, rupees 30 on allotment, rupees 20 on first call, and rupees 30 on second and final call. Further, 10,000 shares were applied for and allotment was made in full. All money due was received with the exception of both calls on 300 shares held by Supriya. These shares were forfeited. Give the necessary journal entries. Let's look first into the details given to us in the question. According to the question, H Limited issued 10,000 equity shares of rupees 100 each, payable as rupees 20 on share application, rupees 30 on allotment, rupees 20 on first call, and rupees 30 on your second and final call. Then subscribed also, it was 10,000 equity shares, and all the money was duly received except for 300 shares on both calls, which was held by Supriya. Okay, so these are your calls and arrears. Further, they've given shares were forfeited. So this question will be pertaining to forfeiture of shares. So most of our journal entries will remain the same when it comes to application and allotment, right? Firstly, let's write the journal entries in the books of H Limited. Journal entries, date particulars, rupees, date particulars, debit column, credit column, amount in rupees. So date, there is no specific date given in the question. So let's start first with the share application. So first journal entry will be receipt of your share application account. So receipt will be in the bank account. So bank account debited to equity shares application account. This is 10,000 equity shares at the rate of rupees 20 each. So the total amount is rupees 2 lakhs. So remember to write your narration being amount received on issue of shares on share application. Okay, and then after that, the transfer of the share application amount. So equity share application account debited to equity shares capital account. Okay, so we're transferring the full amount, rupees 2 lakhs. Make sure you're writing the narration again, being transfer of amount, share application amount to share capital. Okay, and then your share allotment. So in case of share allotment, firstly the due entry, equity share allotment account debited to equity share capital account, being amount due on allotment on 10,000 shares at the rate of rupees 30 each, total amounting to rupees 3 lakhs. So for allotment also full amount is received, therefore bank account debited to equity share allotment account. Total amount rupees 3 lakhs. Okay, so now that you have the amount for share allotment also, let's move to our first call. So firstly, due entry equity share first call account debited to equity share capital account. So the amount due is on 10,000 shares at the rate of rupees 20 each, which is rupees 2 lakhs. Okay, so the total amount due on share first call is rupees 2 lakhs. And now we have to receive the amount on your first call. So it'll be bank account debited to equity share first call account. Okay, so how much? There are calls and arrears on both calls of 300 shares. So out of 10,000 shares minus 300 at the rate of rupees 20, this is how much we will be receiving on your share first call. So out of this, the total should amount to rupees 1,94,000. This is how much we are receiving. Now you can create a calls and arrears account also if you want, or you can just write it simply like this. Just deduct the amount that you're not receiving. Okay, so in case you are creating the calls and arrear account, right, in case you're opening another account which is your calls and arrear account, then you'll be having this entry, which is bank account debited to equity share first call account, total amount rupees 2 lakhs, and then you'll be having the calls in arrear account debited. So this will be 300 shares, which are your calls in arrears, at the rate of rupees 20. Okay, so this will be rupees 6,000, and the balance is 1,94,000, which we are going to be receiving on the share first call. This is in case you are creating calls in arrear account. Okay, so you don't have to use both the entries. Use whichever one you feel you're comfortable with, or whichever one the question asks of you. If the question says you have to create calls in arrear account, then you have no other choice but to create the calls in arrear account. Okay, so moving on. So this is our first call. We have made the due entry. We have received also the cash on our first call. So let's move on to the second call. In case of second call also, firstly make the due entry, which will be equity shares, second and final call account, equity share second and final call account debited to equity share capital account, equity share capital account. So this will be 10,000 shares due at the rate of rupees 30 each, amounting to rupees 3 lakhs. Okay, so now let's receive the money. Bank account debited to equity share second and final call account. So in this situation, again, remember, we're not receiving on 300 shares. Okay, so this amount will be 10,000 minus 300 shares at the rate of rupees 30 each. So the amount we're going to be receiving will be taking out those shares on which there is a call in arrears. So together it should amount to rupees 2,91,000. Rupees 2,91,000 we're going to be receiving. And again, the same applies if you're using the same like the previous share. In case you're preparing or opening a calls in arrears account, bank account debited calls in arrear account debited to equity share second and final call account. So this amount should be 3 lakhs. Bank account amount will be 2,91,000. And in case of the share second and final call, it should amount to rupees 9,300 at the rate of rupees 30 on your second and final call. Okay, so this is the amount we are supposed to enter. This is the entry in case you're making calls in arrears. Okay, so we have called all of the installments that are due on your shares, right? So totally 100 rupees has been paid. So now they're saying we have to forfeit the share. So in case of share forfeiture, the entry will be the opposite of this entry. Okay, the opposite of these entries, which is your due entry. Why? Because we're taking out money from our share capital and we're distributing it or adjusting it. Okay, because we have to forfeit, we have to cancel certain shares. So the entry will be, this is for share forfeiture. Okay, this is your share forfeiture entry. It will be equity share capital account debited. Now, what are the shares that have been forfeited? It will be your first call. So, to equity share first call account, and then the second call also will forfeited. So, to equity share second and final call account. And if there is any balance, it will go to share forfeiture account. So, to share forfeiture account. Equity share forfeiture account. So in case of equity share capital account, it'll be how many shares were forfeited? 300 shares, right? And out of that, from these 300 shares, how much of the money was already called up? So here, because you've called up for the application, allotment, first call, second call, right? Entire amount was called up. So therefore, it'll be at the rate of rupees 100, which is the face value. If you, in case, we'll solve other questions also, but I'll just explain it here again. If, for example, you've called only up to first call, okay, if, for example, you've called only up to first call, then this amount will be 20 plus 30 plus 20 only, okay, because you haven't called this amount, right? 30 rupees, if you're forfeiting only after the first call, that means you haven't called the second call. It hasn't been due yet. So in the share capital account, this amount isn't there, okay? So in this situation, we'll be calling only for 70 rupees. But here, because the entire amount of 100 has been called up, okay, so face value will be 100 rupees, or the amount to adjust from the equity share capital account will be 300 into 100. Okay, so here it'll be 30,000 rupees. Now in equity share first call account, how many shares? 300 at the rate of rupees 20, correct? 300 at the rate of rupees 20. This is how much how much the calls in arrears were. So it will be 6,000. In case of shares second and final call, will be at the rate of rupees 30, which is rupees 9,000. These are our calls in arrears. And when it comes to equity share forfeiture account, it'll be receiving the balancing figure. So 30,000 minus 6,000 minus 9,000 will be 15,000. So this is the balancing figure, okay, rupees 15,000. This is the amount that is available with the firm out of the total that was called up, which was 30,000, okay. So entry you can just write being forfeiture of 300 shares. Being forfeiture of 300 shares. Now, in case you have opened a calls in arrear account, then your journal entry will be equity share capital account debited to calls in arrear account and to share forfeiture account. So here also 30,000, and in case of calls in arrear account, you had 6,000 on the first call and we have 9,000 on the second and final call. So total will be rupees 15,000, and the balancing figure is your share forfeiture account, which is again rupees 15,000. Narration being forfeiture of shares. Okay, so this is how we are solving in case of forfeiture of shares. Let's look at another question. B Limited issued 20,000 equity shares of rupees 10 each at a premium of rupees 2 per share payable as follows. On application rupees 5, on allotment rupees 5 including premium, on final call rupees 2. Applications were received for 24,000 shares. Letters of regret were issued to applicants for 4,000 shares and were allotted to all the other applicants. Mr. A The holder of 150 shares failed to pay the allotment money. On his subsequent failure, the shares were forfeited. Show the journal entries and cash book in the books of B Limited. Now this question, you have 20,000 equity shares at the rate of rupees 10 each plus premium of rupees 2, and it's been subdivided as application rupees 5, allotment includes premium, so total is rupees 5, and first and final call is rupees 2. Applications were received for 24,000 shares, so there was an oversubscription, and they have given that they have rejected 4,000 shares. Okay, they've given letters of regret were issued to applicants for 4,000 shares, which means they were rejected. And then you have Mr. A, who has 150 shares, but he did not pay allotment money, and on his subsequent failure meaning even when the first call was made, or the first and final call was made, he failed to pay that also. So as a result of that, his shares were forfeited. Okay, so here they've told us to prepare journal entries as well as cash books in the books of B Limited. So in the books of B Limited, cash book and journal entries. So make sure you're preparing the T-shape, date, particulars, rupees, and then in case of journal entries, date, particulars, debit, credit, amount in rupees. Okay, so let's start. Firstly, the entry will be in case of receipt of share application money, correct? So when you're receiving share application money, the journal entry we usually write is bank account debited to equity share application account, which means the cash book is going to be affected. So let's write this here to equity shares application account. This is on 24,000 shares. You received application on 24,000 shares, right? So 24,000 shares at the rate of rupees 5. Okay, 24,000 shares at the rate of rupees 5 amounts to rupees 1,20,000. Okay, so now we've received the money. We have to transfer the money to our share capital account. So the journal entry is usually equity share application account debited to equity share capital account. Now remember, an amount has also been rejected. So the entry normally would have been equity share application account debited to equity share capital account, how much we're transferring to equity share capital, and out of this 1,20,000 that we've received, the balance that is rejected should have been to bank account, correct? So we'll be writing it here in your cash book by equity share application account, equity share application account. These are the shares that were rejected. So for the shares rejected, they've rejected 4,000 shares. So 4,000 at the rate of rupees 5 amounts to rupees 20,000. And in case of equity share application account, out of the total that we received, we're only transferring on 20,000 shares at the rate of rupees 5 each. Okay, 20,000 shares that were actually issued. So the amount is rupees 1 lakh. Okay, so this is the amount we're transferring to our equity share capital account on the receipt of your equity share application money. Okay, so once that is done, we'll move on to the next entry, which is our share allotment account. Now, in case of share allotment, first entry would be with regards to the due entry. So let's write the due entry, equity share allotment account debited to equity share capital account. Equity share capital account. This is our normal entry. So in case of equity share allotment, it is rupees 20,000 at the rate of rupees 5 per share. Okay, so at the rate of rupees 5 per share, it amounts to rupees 1 lakh. And then the amount transferred to equity share capital is 20,000 at the rate of rupees. Now, if you look at your question properly, they've given allotment is rupees 5, including premium. Premium is rupees 2, correct? So that means out of rupees 5, only rupees 3 belongs to share capital. So this will be rupees 60,000. And the balance that we're having, rupees 40,000, should be transferred to our securities premium account. Securities premium account. Okay, being amount due on share allotment on 20,000 shares at the rate of rupees 5, which includes premium. Okay, you can just write a narration how you understand. So that is my understanding of the narration. Okay, so after this, now we have to receive the money that is due to us on our share allotment. So let's receive it in the cash book. Okay, it'll be bank account debited to equity share allotment accounts. Let's write it down. To equity share allotment account. On share allotment account, it'll be 20,000 shares minus 150 shares, which Mr. A did not pay for allotment, right? So it will be 20,000 minus 150 will be 19,850 shares at the rate of rupees 5 each. Okay, so total rupees 99,250. Okay, so that is our receipt entry for share allotment. Then we'll move on towards the making the due entry for the share first and final call. So the entry would be equity share first and final call. Here they've given just final call. So equity share final call account debited to equity share capital account. Amount is rupees 20,000 shares at the rate of rupees 2 each. So total rupees 40,000. Okay, now let's receive this money. Bank account debited to equity share final call account. Equity share final call account. This will be 19,850 at the rate of rupees 2. Why? Because 150 shares Mr. A failed to pay on. Okay, so it'll be 19,850 shares at the rate of rupees 2 each. So the amount column will be having rupees 39,750. Okay, so we've called application is done, allotment also we've called for, final call also has been made and paid for. Now the only thing left for us to do is to forfeit the shares on which the amounts have not been paid off. So the journal entry will be equity share capital account debited to equity, to equity share allotment. On allotment you had your first called in area, right? So equity share allotment account, and then on final call also you had calls in areas. So to equity share final call account, and any balance that you're having transferred to equity share forfeiture account. Equity share forfeiture account. Now besides that, if you remember, in case of equity share allotment, there was a premium also included. And in case of the premium, because you haven't received money on share allotment, that means on securities premium also you haven't received money. Okay, so that amount also should be adjusted. So securities premium on forfeited shares is not realized, therefore it should be debited. So here it will be securities premium account. Securities premium account debited. Okay, so in case of equity share capital account, forfeiture is on 150 shares on which all of the calls have been made. So it'll be at the face value, which is rupees 10, at the rate of rupees 10. And then in case of securities premium, it'll be 150 shares at the rate of rupees 2, which is the amount on securities premium itself. Okay, and okay, I'll write the amounts first. 1,500. This will be 300. Okay, so to equity share allotment account, 150 shares at the rate of rupees 3 each. Share final call, 150 shares at the rate of rupees 2 each. Okay, so 150 at the rate of rupees 3. How much are we receiving? Rupees 750 was not received. In case of share final call, it is rupees 300, which was not received. And the balance that you're having, total amount is rupees 750. This was the amount that was received on your shares in case of the amount, before there was any calls in areas. Okay, so on 150 shares, you have received the out of rupees 150 shares, so 1,500. So out of 1,500, you've received only rupees 750. Now, if you want to make sure whether the amount is correct or not, okay, so on 150 shares, the only amount that you've received is your share first call. correct? Oh, sorry, it's your share application, and share application amount is rupees 5. So 150 into 5, you should be getting rupees 750. That is how you cross-verify whether the amount transferred to your share forfeiture account is correct or not. So you can just write narration as being forfeiture of 150 shares due to non-payment of allotment money and final call money. Okay, due to non-payment of allotment money and final call money. So that is our narration for the share forfeiture entry. Okay.